Welcome back to League Update, the place where we make sense of the world's biggest headlines and break them down in ways anyone can understand. I'm your host, Mr. GAI, here to keep you informed and a little ahead of the curve. Today, we're taking a closer look at what's been nicknamed the Big Beautiful Bill, the latest round of tariffs signed into law by President Trump. This bill isn't just another set of trade penalties. It's a sweeping package that could touch nearly every corner of the U.S. economy in the months ahead. So let's talk about what it actually does, who might feel it first, and why it matters to your wallet. The new tariff bill is largely aimed at Chinese imports, but it doesn't stop there. It extends or increases duties on goods from other regions too. The official line is that it's meant to protect American manufacturers and reduce reliance on foreign supply chains, a strategy sometimes called economic nationalism. The hope is that by making imported goods more expensive, U.S. companies will ramp up production here at home, creating jobs and strengthening domestic industries. Sounds straightforward, right? But the reality is usually more complicated. When you raise tariffs, you're basically adding a tax to goods coming into the country. Those costs don't magically disappear. They often get passed along to businesses that rely on imported materials or products. And in turn, many of those businesses pass the costs on to us as consumers. So what does that mean for the average American? Likely, higher prices on a wide range of goods. Everything from electronics and appliances to clothing and car parts could get more expensive. Companies facing steeper costs might also delay hiring, slow down wage increases, or cut back on other investments. That can lead to slower economic growth overall. There's also a risk to the stock market. Investors generally like predictability. When major tariffs are introduced, it adds uncertainty. Companies have a harder time forecasting profits, and that can rattle markets. We've already seen volatility tick up in response to this bill, with the S&P 500 and NASDAQ taking hits right after some of these measures were floated. Meanwhile, on the global stage, there's the issue of retaliation. Countries hit by U.S. tariffs often respond with tariffs of their own, targeting American exports. That means farmers, tech firms, and manufacturers who rely on selling products abroad could face new hurdles, potentially hurting sectors that are otherwise strong. Now, to be fair, there's also an argument that these tariffs could pay off in the long run by incentivizing more domestic production. If companies decide it's cheaper and safer to build factories in the U.S. rather than depend on overseas supply chains, that could lead to more American jobs and a sturdier industrial base. It's a strategic gamble, betting that short-term pain is worth long-term gain. But for now, most economists expect that the immediate impact of the Big Beautiful Bill will be higher consumer prices, added strain on small and mid-sized businesses that can't easily absorb the costs, and more cautious behavior by investors worried about global trade tensions escalating. So what should you watch for in the coming months? Keep an eye on inflation reports. If we see price hikes accelerating faster than wages, that's going to squeeze household budgets. Also, watch consumer sentiment surveys, which are already near historical lows. If people start feeling less confident, they tend to cut back on spending, and that could slow the economy even more. At the end of the day, whether this strategy ends up strengthening American industry or weighing down growth will depend on a lot of moving parts: global diplomacy, corporate decisions, and how quickly domestic manufacturers can scale up. And that's what makes the Big Beautiful Bill such a big deal. It's not just about trade stats or political points. It's about how much we pay for groceries, cars, phones, and ultimately, how secure people feel in their jobs and investments. That's it for this League Update. I'm Mr. GAI. Thanks for spending a few minutes with me to break down what's shaping our financial world. If you found this helpful, hit that like button, share it with a friend who needs to know, and subscribe so you never miss an update. Stay sharp, stay curious, and I'll catch you next time.